Hello and welcome to today's Market Close Report. Let's start with the key numbers. The Nasdaq closed yesterday at 26,517.93, the S&P 500 at 7,500.58, and the Dow Jones at 51,564.70. Today we are seeing a clear pattern of structural divergence in the market, with capital rotating away from external tech risks and into domestic defensive plays. Looking at China's A-share market first, the Chi-Next index was the standout performer today, surging 2.05% on strong volume. The Shenzhen Component Index also gained 0.94%. But the SSE 50 fell 0.2%, and the Shanghai Composite edged down 0.43%. This clearly shows money moving out of large-cap blue chips and into small and mid-cap growth stocks. The direct catalyst here was the Ministry of Commerce's anti-dumping investigation, which directly fueled the domestic substitution theme. Now turning to the U.S. pre-market session, all three major futures indices were higher. Nasdaq futures led with a gain of 0.74%, and S&P 500 futures were up 0.42%. But the cash market hasn't opened yet, so we need to watch how the market digests yesterday's hawkish comments from Fed Governor Waller tonight. On the macro front, the dollar index fell 0.23% to 100.85, and gold edged up 0.49%. This suggests that the safe haven bid for the dollar is softening. However, the VIX Volatility Index rose 2.32% to 16.78, indicating that the market remains cautious about short-term risks, such as export control escalation and the MSTR rumors. Let's walk through today's global path. In the Asian session, the A-share market diverged immediately after the open. The Chi-Next strengthened on the dual drivers of the anti-dumping investigation into optical fiber preforms and AI chip controls, while the Shanghai Composite weakened under the weight of banks and insurers. The renminbi appreciated 0.22% against the dollar to 6.7812, signaling increased attractiveness of renminbi assets. European session data was missing, so we cannot assess that region. In the U.S. pre-market, futures were up, but the 10-year Treasury yield held steady at 4.45%, and the VIX rose, indicating cautious sentiment. The turning point today came from China's Ministry of Commerce anti-dumping probe, which became the sentiment inflection point for A-shares, flipping the Chi-Next from weak to strong. The sentiment leader was the Chi-Next, up 2.05%. The laggard was MSTR, down 5.14%, weighed down by accounting investigation rumors and high leverage pressure. Looking at the three-way linkage, the weaker dollar and stronger renminbi are moving in sync, which is positive for emerging market risk assets. U.S. equity futures were up while the Shanghai Composite was weak, suggesting a seesaw between U.S. tech and Chinese blue chips. But the Chi-Next strength shows that China's self-sufficiency logic is independent of U.S. tech risks. The 10-year Treasury yield held steady at 4.45% and did not rise with the hawkish Fed comments, indicating that the bond market has already priced in a September pause on rate cuts, meaning short-term bad news is already priced in. Putting it all together, the combination of a weak dollar, stable treasuries, and a strong renminbi is favorable for emerging growth, but the rising VIX warns that risks have not been fully eliminated. If U.S. stocks do not fall sharply tonight, the Chi-Next could extend its gains in Monday's Asian session. But investors should watch northbound capital flows and the risk of export control details being released. Let's look at the strongest themes. The strongest direction is A-share domestic substitution and self-sufficiency, particularly in the optical fiber cable supply chain. This has a 70% probability. The driver is the Commerce Ministry's anti-dumping probe, which directly boosts domestic pricing power and market share expectations, combined with AI chip controls reinforcing the self-sufficiency narrative. The data support is the Chi-Next rising 2.05%. The second strongest direction is the U.S. tech stock futures rebound, with Nasdaq futures up 0.74%. This has a 55% probability and needs confirmation from tonight's cash market open. The weakest direction is high-leverage crypto concept stocks like MSTR, down 5.14%, and IBIT, down 2.39%. This is more of a single-stock risk than a systemic one, as Bitcoin itself was stable, up 0.69%. Now for our actionable predictions. First, we expect the Chinex to continue rising on Monday, with a 60% probability and an expected range of plus 0.5 to plus 1.5%. The core driver is continued domestic substitution sentiment and a weaker dollar benefiting emerging markets. The risk is weekend export control details or anti-dumping retaliation. The verification signal is opening 30-minute volume higher than Friday and net northbound buying. The failure signal is the SSE 50 breaking below 2,900 or the Chinex opening down more than 0.5%. Second, we expect the Nasdaq futures to actually close higher tonight, with a 55% probability and an expected range of plus 0.3 to plus 0.8%. The core driver is futures discount repair and strength in NVIDIA and QQQ pre-market. The risk is continued impact from Fed's Waller comments or MSTR rumor spread. The verification signal is the Nasdaq cash market holding above 26,500. The failure signal is the VIX breaking above 18 or the Nasdaq breaking below 26,300. Third, we expect the dollar-renminbi pair to trade in a 6.77 to 6.79 range, biased slightly weaker for the dollar, meaning a slightly stronger renminbi, with a 60% probability and a target near 6.76. The core driver is a weaker dollar index and potential support from Chinese trade data. The verification signal is the dollar index breaking below 100.5. The failure signal is the dollar index rebounding above 101. Fourth, we expect gold to trade in a 4,150 to 4,200 range, biased slightly higher, with a 55% probability and a test of 4,220. The core driver is a weak dollar and moderate safe haven demand. The risk is repricing of hawkish Fed expectations. The failure signal is the VIX falling below 15.5. Let me give you our final conclusion. The market is showing clear structural divergence, with domestic substitution emerging as a new theme, but overall risk appetite is converging. Our strategy for tonight through tomorrow morning is to control position size and lean long, focusing on A-share Chinex ETFs and domestic substitution plays on dips, while staying on the sidelines for US stocks. If the Nasdaq closes up more than 0.5% tonight and the VIX falls back below 16.5, we can add to A-share Chinex ETFs on Monday. But if the VIX breaks above 18 or the dollar index rebounds above 101, we turn to a wait-and-see approach. The failure signal is the dollar-renminbi pair breaking above 6.79 or the Chinex breaking below 4,100. Thank you for watching, and we will see you tomorrow.